All right there, everyone. Great to be back with you. We have back with us Bob Kudla of Trade Genius Academy. If you're not familiar with Bob, you ought to be. He started Trade Genius Academy back in 2015 after 25 years as an executive for two Fortune 500 companies in the financial services industry. And over the past 5 years, Bob has amassed an amazing 65% overall win record in the market. So today's Bob is going to be giving us a sense of what to expect as we approach the summer months here. So Bob, welcome back. Great to have you with us.
Hey, thanks, Dr. Steve. It feels like 12 years sometimes.
It does feel like, yeah, it certainly does. Yes, absolutely. In these uncertain times. Well, obviously, the big question, Bob, is, are we seeing Jimmy Carter 2.0? We may be seeing inflation levels like we haven't seen in decades. What say you?
Yeah, it's a great analogy. I've been telling people that this is what we're seeing in a really condensed way. We're seeing the late 60s and early 70s happening in a 2-year time frame. We have the FANG stocks, which are really the nifty 50s of the 60s. If you're younger than I am, you need to probably consult a history book. But I lived the 70s, so the nifty 50s where you buy these stocks and you just put them away and you don't trade them, and they're going to go up forever, yada yada yada. Same with the FANG stocks, and then lo and behold, we basically went from the end of the 60s until the middle of the 1980s before people got their money back, because it was just it was a top. And what happened there wasn't just a top, it was a rotation. So just like today, it used to be guns or butter. I don't know if you ever remember that phrase. And then it became guns and butter. And then it became stagflation because Nixon took us off the gold standard and we went ahead with 4x increase in oil prices. We're recreating the same environment again, where we're creating unsustainable growth in money supply. And I'm not faulting who's getting the money, but when you pour money in to the lower tranche of the economic pie, the money tends to be what's called hot. It means it gets spent right away. So it creates this velocity. And so we created this demand for goods and services, but the supply is constrained. Number one, it's constrained by pandemic, right? It's also constrained by some economic issues with the supply chains around the world. And then it's also constrained because people underinvested in things because they didn't want to spend the money because the stock market's so high and the investment would reduce their EPS. And so we had this perfect storm to create not only higher prices, Steve, but we're creating hoarding and shortages. And these things aren't short term. The things that matter most to us are long term. Look, food is going to be suffering because of the grand solar minimum, number one. And number two, by some self-inflicted wounds in China that are sucking out basically all the exports from around the world. So you're starting to see Argentina and you're starting to see Russia put export controls. United States, the Chinese have been buying so much corn and so many hogs that our farmers are feeding their feed animals with wheat because it's more profitable to sell the corn to the Chinese than to pump them into our farm animals and sell them as meat. And so we're starting to see that becoming, and that's a potential flashpoint if China sucks all the protein and grain out of the country and it leaves a shortage for Americans. That's a potential. We have to watch that one in the next probably 6 to 9 months. But it's creating a non-transitory inflation. And I think it's going to lead to stagflation because this game they're playing now with this welfare payments, they're trying to recreate in a backhanded way that I forget what that basically the ongoing payment stream for people not to work, right? The uniform basic income, whatever they call it. What's putting all kinds of pressure on small businesses, not just small businesses. I'm seeing signs that all the chains, they can't get people to work. Right. So when they get them to work, they have to offer them basically higher than minimum wage to get people to compete. That's what the Democratic government wants, but they have no idea what they're unleashing with this because they're just creating a higher cost structure for businesses that are going to pass on to them, and the people never really get ahead. So we're creating the structure like stagflation of the 70s, and they're already seeing it too. So you have they're getting polling data. The Biden camp is already worried. They can't get people back to work, so the employment report looks awful. Small businesses are screaming at their politicians, and they're the ones that will interact. You got the soccer moms screaming at the politicians because they won't open the schools, and so he has a perfect storm on his hands. And you have a section of the population just standing back because they just don't know when you could pass go or not. So I think your analogy is right on.
Yeah, and it seems too that you've got like you just said, the combination of the COVID payments that are coming out, the public payments, as well as just the pent up money that's just been as you said, hoarded over the last year or so, ready to get spent. And just the combination of those two things alone are enough. Forget the Colonial Pipeline, forget all these other problems, right? Those two things alone are enough to unleash some inflation here. So yeah, it looks. So what do you see? What do you see for the market for the next few months then?
Yeah, so we're seeing rotation. So I think the stock market, if it didn't hit its high for this economic season, it's about to. I know a lot of people think because the Fed has your back, it can just go up indefinitely. But Japan's been doing this now for 30 some years, and they've had 4 or 5 50, 60, 70% corrections. So it's not as easy as that. But what we're seeing is a rotation. So we've been talking about this for months. Uranium now is breaking out. I've been begging people to buy that now on your show and elsewhere for months. Buy the uranium miners. They're going to blow up, and now they're blowing up. Platinum and palladium, silver and gold. Last week or 2 weeks ago, the Mexican government wanted to close the mines. Okay. And all of a sudden, silver started to wake up, and silver's been having a run since then. I think it's a 50% in the last 60 days. So, and once silver and gold break out, then it's game on. And, we've been heavy in the miners. That's where 80% of my trading has been. 80% of what I signal out to people is probably 80% of my conversations with people. And we're still early, Steve. A lot of people think the Federal is going to be able to contain this, but they're not. It's too broad based. You have shipping companies not bringing ships on the market. You have rental car companies that can't get cars because used car prices have gone up. They sold them. You're creating a shortage there. You have food shortages right now. You have copper shortage. Lumber is finally starting to break down, but lumber was up 300%. There's no shortage of trees last time I looked. And so what has happened is these things are manufactured crises, and they're gonna roil the market. So I'm just going. I know the Fed can't stop spending money. I know the Democrats won't stop spending money. So you got to go where the hockey puck's going, and that's where we've been, and we've been well rewarded.
What about the whole crypto roller coaster going on? It's fulfilling its job description of volatility. What do you see going on in the crypto market?
Oh, is there something happening there? Yeah. So our view is that we told our subscribers in April that we see a move down in May, and so we said hey, 50,000, and if it breaks 50,000, it's going to go to 43,000. So we're really at the point where we think the bottom is in for this move, and it may bounce around here now for a couple weeks. Forget all the noise you hear with Elon Musk, whatever. He's just the excuse du jour. Okay, the market was going to go down anyway,
right?
Because it was ready to go down. Anytime somebody says something because somebody said something, that's just an excuse. So we're looking in June for it to come back up. But people have to bear in mind, Ethereum just hit all-time highs. Litecoin just went over 400. Link hit all-time highs. Cardano hit all-time highs. Dogecoin hit all-time high. It's not like the crypto market's been failing. It's just that the money's hot right now, and you're going to get the whipping. And the nice thing about crypto is, what's nice or not, depending on how you like volatility, is that it's a pure market. So it's it's truly an auction. There's buyers and sellers out there. There's not as much, middlemen as you have in the stock market. Not to say there's not, but it's not like, and there's a lot of leverage. So when these moves happen, they tend to be exaggerated one way or the other. I just remind people that in September, I think crypto, Bitcoin was at $8,000. So it's not like the crypto market blown up. It's just that when something moves up 8x,
yeah,
6 months, you should expect a pullback, and the halfway pullback is in the mid 30s. So it's not like it's not even pulled back halfway yet. So if you're a believer in this, you're going to have to weather this storm. And if you're not in it, you're getting the dip. You always say you want it to buy. And the way I trade it is I don't sell it. I just keep buying dips because I'm still trying to amass my level of ownership. And so you just have to be smart about it, and I'm not going to get into a religious topic with people on this, but I practice this money management. I have a certain percentage of my wealth I want in crypto. I have a certain percentage of my wealth that I want in the hard, physical, and the rest of it in and out of trading. I have my real estate. So you have to find the level that's good for you. And for me, I'm still building. And so when I hit my number, then I'll manage. But, I'd have to say, from Trade Genius's standpoint, we're bullish in the fact that we think the central banks and the Federal Reserve are not done. And so crypto is basically an antidote to the failing banking system, and the miners and metals are for failing currency. Right.
Wow. Excellent. So they're hedging off each other. Fascinating. Let me give you a couple of shout outs here. And if you could just give us the backstory to this. This is from Dale Shepard. Nice trade on MAG. Thank you, Mr. Bob. What's that? It seems to have just come out today.
Yeah, MAG Silver. So we've about a couple of weeks ago, I was showing people the charts and said you need to take a position in MAG Silver. It looks like it has a move up to the 2090 area. It pushed right into the 20s, and apparently, Dale wanted to let me know how happy he was with making money on that trade. I just got out of it myself for a trade. I'm a big believer in the silver miners, but MAG Silver had a beautiful run, and I think that's what he's referencing.
How about Leith? Up 8.5% on UEC.
Yeah, so I'm on vacation last week, and I can't put the stupid charts down. And, I saw, and I'm a big uranium fan, and I'm not, I get new subscribers all the time, so I don't know what people own or don't own. So I saw UEC coming up on a buy, and it was like the 270 area, and I said, hey, you need to grab a hold of this if you don't already have a full position in uranium. And it popped up to 325, and apparently he made 8.5% on it. And you're talking from Friday till what's today, Tuesday, for me talking to you. So he made 8.5% in 2 days. Not bad. Shake a stick at that.
That's very cool. 8.5% in 2 days. Sign me up. How about this one from Tyler? I want to thank you turning me onto MOS. That's been a constant earner for me. Thanks so much.
Yeah, I told people MOS is Mosaic. This is a fertilizer company. People need to have a position in this. This is when you can't get the crop to grow fast enough, you got to spike it. It's kind of like adrenaline for food, for grains, and so there's not enough of it being mined right now. So this was trading in the 17 and 18 area when I turned Tyler and other people onto it. I just said, look, we're just going to rinse and repeat this thing every time it gets overbought. We'll take some off, and then we'll buy it again. It's going to 50. So I hit 37 or 38 on last week, and it's in the mid 36s right now, and it's just been an ATM machine for us.
Wow.
We just keep buying it. It gets overbought. We take some off the table. Gets oversold. Basically our algorithm is telling us to buy and sell. We keep a position and we keep adding to bring our costs down by average, and we think it's going to hit 50 here before the summer's out. So yeah, so those are and that's typical of the trade I share with people. We get in the right macro, you just rinse and repeat these trades. We've been doing this with Quad U, we've been doing it with PLG, and we do it with the silver miners, and we just call it see trade, take trade, rinse and repeat, and until the macro trade plays itself out. and then you move on to the next bull market.
So, I mean, that leads me to the question. Give me a sense, or give our viewers a sense of what they can expect if they were to sign up for Trade Genius. What kind of walk us through the first few weeks?
Yeah, so every day is pretty much the same. So when you join us, you get access to our algorithm through a software package called Trading View. So you trade off the same indicators that I trade off of. So you see what I see. We teach you. We have 22 classes. They're like 3-4 minutes long each, explaining every aspect of how we trade. We put it in bite-sized pieces so people can refer back to the things that they don't quite get or want to reference later. And that's all part of the service. In addition to that, we have a chat room running that you can ask questions to talk to your fellow traders 7 days a week, 24 hours a day. And then I'm in those rooms on the stock side when the market's open. And then we have a VIP room where you can talk like you and I are talking. So it's a little bit more money, but you get more personalized attention, and people seem to love that room. And then also we provide trade signals every day. So like I said, you see one I popped out on Friday. We put a couple other trades. I bought Riot, which is one of the Bitcoin miners. Told people on Friday to buy that at 24. It hit 26 today. You know, that's a 70% move in 2 days. So we're always looking for opportunities for people. And so we'll teach you how to fish. We'll provide you some fishing equipment, and we'll throw you some fish at the same time. It's a good process. You know, when you said, you know, we win 2 out of every 3 trades we take, and we have what's called a positive profit factor, meaning that we win more when we win, and then we lose when we lose. So we're always driving the program forward, so you can you can just grind your way to wealth building over time.
So what can people do to register?
Yeah, so just go to tradelikeagenius.com or tradegeniusacademy.com, and you can call us, text us, you can message us, email us, and we'll get back to you and we'll advise you as what we think the most appropriate package for you. It's not always the most expensive one, depending on what you're trying to get accomplished. And then you join, and the next day you're ready to rumble. And so you got to take advantage of the bundles that we discounted those pre-bundles 65% off. So what you see is what you pay. And then if you want something that's not bundled, you could take 45 to 40% off in the store. Just use the promo code spring or May and you'll get those prices.
Awesome. Awesome, Bob. Well, I know, gosh, I can't even count how many of our viewers, our audience have loved Trade Genius and these interviews and the clarity that you bring to these uncertain times. You're very appreciated. Thanks again for being with us, Bob.
Yeah, thanks, Dr. Steve. I'll talk to you soon.
Excellent.